This is Commodity Wrap. I'm Tony St. James. Brian Hoops is with us. Brian is president, Midwest Market Solutions. And Brian, we do this from time to time, but just elevator speech, where you are and what you do.
Well, we have 4 offices around the Midwest. I am located in Springfield, Missouri, our home office. Branch offices right now located in Thief River Falls, Minnesota, Pocahontas, Iowa, and Yankton, South Dakota. So, we used to have almost 10 offices at one time, and through attrition and retirements and a few other things, we pared down those branch offices to just 3 offices, including the home location. But we have 8 brokers, and we do commodity brokerage as well as advisory services. And we have a few support staff, so you can find us on Twitter at Midwest Markets, Brian Hoops. I'll have information there posted throughout the day, and also a text service. If you'd rather just get some information sent directly to your cell phone, text message service is a good way to go. We can give you all kinds of information and keep you up to date on what is the latest happenings in the markets.
Well, speaking of latest happenings in the market, well, so much for trying to make it a hat trick. If you follow hockey, a hat trick, I guess it could be soccer as well. You get 3 goals in a game, and that's a hat trick, but not happening for corn or soybeans or soy meal, not happening for the wheat market, guess not happening for cotton either. So was this just one of those where we need to stop and catch our breath after a couple of days of higher trade?
Well, it kind of felt that way this morning, and one of the things we mentioned this morning is to what happens with the midday weather models. There was conflicting models this morning that one was leaning towards a little bit cooler, a little bit wetter forecast in the long term, while one was still hot and dry. And we said those midday models will be very important for late direction, and they certainly were. And the late direction of the midday models, both of those models kind of flipped to going cooler and wetter in the extended period. So that's why we saw this big sell-off during the session. We've seen funds be really big buyers over the last several sessions, especially for corn. Well, they didn't buy today. If they did, they bought it early, and then they sold everything late, ended up as net sellers of 28,000 corn on the day. And a lot of that came later in the day. Didn't quite have an outside day lower, but 8-cent losses in corn, 5.5-cent losses in soybeans, pretty sizable losses for the session in here as we kind of failed at some resistance points, turned back lower. And I wouldn't call these a real meaningful reversal, but maybe more of a common type reversal.
Okay. One that didn't move lower, bean oil. And, we look at bean oil finishing higher for the 3rd session. And since I'm talking about beans, how do we have this conversation without talking about China? Flash sale. What can you tell us?
Yeah, we got to talk about China a little bit. There was rumors on Monday and then Tuesday that they had bought 5 cargoes or so each day. And, this is part of their commitment that they had made to buy 25,000 metric tons of U.S. soybeans. Well, it was confirmed this morning by private exporters, which by the time we have it confirmed, it's a kind of a buy the rumor, sell the facts sort of trade. But there was confirmation of about 472,000 metric tons of beans sold for China. We may have more of these private sales over the next several sessions, but again, it's already been rumored and factored into prices, so it's probably somewhat old news. And again, these are hedges that China is making, kind of bets against prices moving higher. If the drought or dry weather, I should say, continues into late summer, yields get curtailed, prices move higher, they have some product locked in, and if not, prices are sharply lower by harvest, they have an opportunity to cancel these and make additional purchases at cheaper levels. The reason why bean oil was higher, well, you look at crude oil, tensions are escalating between the U.S. and Iran once again. The ceasefire is just not working out very well, not like President Trump and the United States had envisioned. So it looks like military efforts are being ramped up. Crude oil values were a little firmer yesterday, but sharply higher today, and that helped bean oil follow the crude oil market higher.
Okay. again, there's this buzz in the market that, again, before the Middle East thing kind of came off the rails, which I don't know who's really surprised by that. And honestly, I kept myself from looking at headlines, trying not to get swayed one way or the other by the on-again, off-again drama and the relationship or lack thereof. But just the buzz that China being back in the market and could be buying other commodities as well, is that still kind of in the background?
It's way in the background at this point in time. Our 95 of our pricing influence is weather and how big of a crop we're going. The reason that China and buying U.S. is not going to excite anyone at this point in time, it may excite people who want to hear that news and like you and I that want to report it. But the reason why the professional traders largely ignore it is because they know that China can cancel these purchases at any time, and it doesn't really move the balance sheet. So this is something that the trade had been anticipating, that they would be buying soybeans, but this is not a surprise purchase. It's not anything that is significantly changing the balance sheets, such as a weather forecast or amount of rain or heat or dryness can do. That can significantly change the forecast. 1 or 2 bushels per acre difference in yield, that makes a huge difference to the bottom line. And markets have kind of already priced in China buying U.S. soybeans and looking at it already past that.
We're talking with Brian Hoops, Midwest Market Solutions. We're back with more on Commodity Wrap. It's Commodity Wrap. Our guest today, Brian Hoops, Midwest Market Solutions. We'll have contact information in just a moment. We wrapped up the first segment talking about trade and the potential there with China. And, there was a flash sale reported on Wednesday morning for China, 17.3 million bushels, 71% of that being new crop. Now, I don't necessarily want to talk about China here, though we could with the cattle market, Brian, but there was, I think it was, what would that have been, weekly export sales last week, that we had this huge number for beef in there. Is that thing going to stick, or has USDA come back and revised that? Any thoughts on that?
It was such an anomaly compared to where we have been that you wondered if the USDA was going to revise that somehow, or if there was a number that was typed in wrong, something. But I guess we'll see tomorrow when we have those export numbers if there's any type of follow-through or if there's a correction made to these numbers. But those numbers last week, certainly a very, very impressive number, and one we would love to see repeated. The cash markets this week, it started off on the soft side of things, 3 to 7 lower on a dress basis at that 395 to 400 level. That's a disappointment, but not unexpected, I don't think. I think the trade was expecting with cutouts being down, we'd see lower cash trade. What really, I think, kind of helped this cattle market today anyway was the fact that corn prices started to weaken, and there was a bid started to come into the feeder cattle market, and that's one that closed higher, almost a $10 range from high to low. It was such a sell-off early in the session, but caught a bid and rallied late in the day, and there's some seasonal tendencies or studies that suggest buying feeder cattle today works about 12 out of 15 years or 80% of the time. So you have a few positives, at least in the feeder cattle market, and from a technical standpoint, that market has not fallen anywhere close to its June lows, whereas August cattle came within just a stone throw of it this morning before it rallied. So there's more to like, I think, in the feeder cattle market right at this time compared to the live cattle. Cheaper corn should help out. If the corn market follows through in the overnight or tomorrow morning, looks like it would trade lower, that should help out feeders in the morning. And we'll see. The live cattle may not have a lot of gains, but certainly being discount to the feeder cattle index, discount to the cash markets, help and are a supportive feature for the cattle.
And While we're talking pressure there kind of in the livestock markets, how about the hogs finally kind of turning things around and sniffing around $100 in that August contract? Final thoughts?
Finally, have been waiting for this hog market to show some life, and it's taken quite some time. You like you mentioned, August contract today had a real strong rally. All the deferred contracts had rallies, over 300 points in October and December by the closing bell. It really looked like the hog and pig report that we had was supportive for this market, especially for some of those back months. And maybe we're starting to see some short covering now, finally, as the market is kind of creeping its way higher. And those back months are heavily discounted. You have December trading at 76, where the cash markets are 92. Likely the cash will come down, but they may be so discounted here in those deferred contracts. There's people wanting to buy just because of that discount and because the technical trend is starting to firm up and maybe start to move higher. All this is very positive for the hogs, and hopefully the cash markets stabilize and can move higher, because that's the one thing that's been holding this hog market back, is the cash market's just been more steady over the last 6 weeks than trending higher or trending lower.
Brian, if we want to learn more, we started the conversation. You told us kind of the elevator speech about Midwest Market Solutions, but if we want to follow up with you, learn more, talk one-on-one, how do we do that?
Well, you can reach me directly, 417-501-5132, and if you want to go online to find a location in your area, you can go to our website, which is MidwestMarketSolutions.com.
Brian Hoops, President, Midwest Market Solutions, and this is Commodity Wrap.